Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Leader, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the home business community. Okay, so one of the things I get asked about all the time is how much to withhold for taxes. And the rule of thumb is 30%, right? 30% of your gross. And people, look at me and go, that's a lot of money, which I get, it is, okay? But that's what I recommend. And in that, what's in that number? That 30% comes from about 25% for your federal taxes and another 5% for your state. And if you happen to live in one of the 7 states that do not have income tax, well, yay for you. But, you can reduce that number, but we usually go with 30% because you really want your, really want your tax reserves to be able to pay for taxes. And if you have annual fees for your LLCs and all of that stuff, this is what that money is supposed to be reserved for. Okay. But like I said, people have heartburn about, that 30% because it is a big chunk of change when you think about that. Reserving that money. So I wanted to talk about that today because I just finished up my own tax return, and I practice what I preach. I reserve 30% of my income, my gross income, for taxes. So that means every time I get paid, before I do anything else, I take 30% of that number and I transfer that to my tax account and I leave it there. Okay. So now let me tell you what has happened. Okay. So this year I'm over here looking at my tax return. Our tax liability for 2019 was just around $19,000. Yeah. So, so the thing about tax liability is that when people are looking at their taxes, they're looking at the bottom line number, whether they're going to get a refund or if they're going to owe. And you really need to be looking at the tax liability, how much tax you actually owe, because that's going to help you determine, if you have a job, if you need to have withholdings, if you need to adjust up or down, or, if you're planning for your taxes, you need to know about what your tax bill is, because that's going to help you figure out, what you're going to be looking at for the next year, right? So yeah, our tax liability was right around $19,000. Yes, somebody's salary. Okay. So, and so here's the result. So like I said, I transfer 30% of my gross revenue into my tax account. And because of that, I can write a check for our tax liability as well as our first and second quarter estimated tax payments. I have the funds set aside to do that. So I'm not sitting here figuring out, how am I going to, pay this tax bill? No, I've got the money that's set aside to be able to do that. So I don't have to worry about that. So the pain of, reserving those tax funds in a tax account, yeah, that's hard, but it's better than to be sitting here trying to figure out how we're going to pay this tax bill. Does it hurt to write these checks? Heck yeah, right? It absolutely hurts to write these checks, but it would hurt worse to have to write a check and not have money for it. And so this is why I'm saying to you, you go through the pain of reserving those funds so that, whatever the number is, you're prepared, right? And that's really what I'm happy about. Believe me, when I shared this conversation with my husband, he looked at me kind of cross-eyed, but it is what it is, right? But the thing about it is I have the funds reserved, and so I can just pay my tax bill and go on about my business. So it's not something that, and oh, by the way, because I have the money to pay our tax bill, I have the money to pay our Q1, because that tax liability and your Q1 are due at the same time. We got the money reserved for that, right? And so now if I wanted to pay Q2, which is due in June, I could do that I haven't decided if I'm going to do that or not. I might wait. I don't know. But whatever, right? The fact is, because I have this money reserved, I have options. That's the point. And so I could either create my own tax refund, right? I could take the money out of my tax account because I have enough money to pay my tax bill. Whatever's left over, I can take that money and either give myself a bonus, or I could reinvest in my business, or I could pay my taxes ahead. That's what having this money reserved gives you. It gives you choices. Okay? So you can look at your cash flow for the next couple months to say, and to make some decisions, right? So I had a question, and it's an important question, and that comes to this, and it says, are we supposed to file every quarter or every year? This is a great question. You file every year, but you pay taxes every quarter when you have estimated tax payments. So don't confuse paying estimated tax payments with filing employment taxes. When someone has to file quarterlies, those are employment taxes. Paying estimated taxes is just you sending money to the government, in which you can mail them a check or go and pay online, right? Most people are petty like that and just will write a check and mail it in because the way their petty is set up. But you can actually go pay online. So yeah, when you have a tax liability of $1,000 or more, then you have estimated tax payments. And usually when you prepare your taxes, you'll get vouchers that say how much you're supposed to pay. Now, one of the things I will tell you is that when you have estimated tax payments, they usually spit out the federal vouchers, but you need to look for the state, because states also have estimated tax payments too. Right? And it's just, a lot of people just don't know that, but you do. States have estimates as well. So when you have a federal tax when you have federal estimated tax payments, you also want to check to see what the threshold is for your state to make sure that you're making those payments as well, because both the federal and the state will charge you an under withholding penalty if you have under withheld your taxes for the year or underpaid your taxes for the year. Okay? So yeah. And so if you are keeping up with your bookkeeping, which I preach all the time, you will know month to month, quarter to quarter, what your profit is. And you can go to the IRS website, do that paycheck checkup, and that's the withholding estimator. With the withholding estimator, and for us self-employed people, we have to use the withholding estimator in order to figure out what our tax liability is. So if you go and you have this major boss out quarter or year or whatever, and you need to increase your payments, then you know this, right? And so that's what the withholding estimator is for. So you can do a checkup throughout the year to make sure you're not under withholding. And how do you tell if you're getting an under withholding penalty? When you file your taxes, if you look on your tax return, if you owe, there is a little spot next to it is box number 24. Right? And if there's a number in there, then you're getting a penalty. I have no number, which is I'm excited. There is no penalty. So yeah, so this is how it works out when you discipline yourself to withhold that 30%. Okay? That means that you're then going to have the money available to pay your taxes. And again, I get it. Nobody likes paying taxes. I don't care who you are. Nobody likes paying taxes, but I like having the money available to pay my taxes, though. Okay, that's the truth. So thank you so much. So I just wanted to share with you, like, yeah, I do this too. I hate it just as much as you do, but it's the cost of doing business. Business owners, when you are profitable, you will pay taxes. Okay, I don't care who you are, right? I know people like, oh, Jeff Bezos, right? I shared an article that said, oh yeah, Jeff Bezos is finally going to pay federal taxes this year. But listen, There's employment taxes, there's state taxes, there's sales taxes. We business owners pay so many taxes, but yet we always get wrapped up in the federal, and it's not just federal taxes, okay? There's lots of other taxes that business owners got to pay. But just know that when you're profitable, that yeah, you're gonna pay taxes. That's just what it is. All right. So yes, thank you guys so much for tuning into Home Biz Tax Talk. I hope this gives you something to chew on, let you know your girl is not crazy, okay, when I say to withhold this money. And another thing that people ask me is like, where do you put the money? Put it in a completely separate account. Okay, put your tax money in a completely separate account, not mixed in with your personal money or your business money. Have it completely just separate, okay? Whole nother account that's not to be touched, all right, until tax time. If you do that, that prevents you from overspending your money. Okay, and it prevents you from looking at that account and seeing that, okay, that you have this money, and you're like, oh, I have all this money, when part of that money is your tax money. So if you just separate that out and only go in there when you need to pay your taxes, then you'll be fine. Okay, so now I'm done. All right, thank you guys so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here to withhold your taxes. You can come right here to get your questions answered about your home business taxes. All right, I'll see you guys next time. Bye.